Hey guys, hope you and the families are doing well. This video is going to take you through a 5-minute opening range breakout trade that I had in Palantir, ticker PLTR, on April 15th, 2025. Now, when teaching you the setup, there's a really important concept that I'd like you to learn by the end of this video, and that is looking for relative strength across multiple durations to better ensure that you are trading the leading stocks, both from a daily chart perspective, but also from an intraday chart perspective as well. So we're going to be comparing PLTR on its daily chart, but also the 5-minute chart versus the triple Qs being our proxy ETF for the NASDAQ 100. Now, at the end of this video where I'm analyzing my trade from April 15th, 2025 in PLTR, you'll see it all flow into a guided tutorial video on how to trade the gap up opening range breakout, which is very detailed in nature. So I hope by the end of this entire 2-part video that you're about to watch, you get a really good sense of how to trade these type of setups and identify those leading stocks. Market Surge are today's video sponsor. They're my go-to resource for analyzing company fundamentals. You can currently see the chart here of PLTR. If you're interested in a discounted chart, then you'll find a link to that in the description and the comment section below. So let's go gadget. We're going to start off on the daily chart, then we're going to go into the 5-minute chart so I can really break it down for you. There's a couple of things that I'd like to highlight from a daily chart perspective regarding relative strength. So we can see what the NASDAQ 100, as shown by the triple Qs ETF, has been doing of late. Clearly been in a correction, potential change of character going on in recent weeks. We'll see how that unfolds, but you can clearly see here lower low, lower high, lower lows, and currently a lower high. We'll see if this can start popping back up, maybe into these overhead moving averages in coming sessions. But what we can see here is the triple Q is clearly below all key daily moving averages. Again, it's been able to get back above the 10-day, but what do you notice with PLTR? Interesting, right? It actually forms this double bottom pattern. So there's the double bottom, looks like a W, you see that? A W type pattern. And what's really good is the second bottom in the W pattern, the double bottom, actually undercuts the first one. And this is what I call a gap down reversal bar. So it gaps down, opens near the low, pushes up, and then you can see this V-shaped rally that's actually been able to bring PLTR above all key daily moving averages. You see that? It's trading above all key daily moving averages. The 200-day, which is the red line on my chart, is down here somewhere. It's actually off the chart, whereas we can clearly see the triple Qs is trading below its 200-day simple period moving average. So just looking at price relative to key daily moving averages, well, we can see PLTR is much stronger. It's actually been able to reclaim all key daily moving averages, while the triple Q has only been able to reclaim its 10-day EMA. So PLTR is a real leading stock here from a daily chart perspective. I also really like the company fundamentals here in terms of the EPS growth, the earnings growth, the sales growth, the story, AI, yada, 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 right? So on the daily chart, it's displaying a lot of relative strength versus the applicable index, which is the NASDAQ 100 shown by the triple Qs. Now, if we dial in here, what we're going to be looking at is the 5-minute chart on April 15th for PLTR and also for the triple Qs, and you'll see that I've highlighted a couple of important times, okay, 10:15, 2:15 p.m, and the entry here, which is through the high of this first 5-minute candlestick, okay, and then the initial stop loss placement down here, lower the day by a cent, that's going to be 93.04. That means I've got an initial stop of 1.61%. Okay, 1.61% relative to a current ADR 20-day average daily range percentage of 8.4%. 8.4% is the current 20-day ADR percentage for PLTR. Such is the volatility in the last 20 sessions. So my initial stop loss at just over 1.5% is very favorable on a risk to potential reward basis, just based on the daily range of PLTR. Okay, so I look for it to be half to a third, but if you start getting it down to a quarter relative to the 20-day ADR percentage, that can be very, very favorable, especially if the stock is displaying this degree of relative strength across multiple durations. So in terms of the entry, you get this bullish first 5-minute candlestick. So I'm targeting what's called, in this instance here, it's a little bit of a gap up opening range breakout, but it's an opening range breakout. Again, the video that follows this video is going to be a detailed tutorial on gap up opening range breakouts, and there's a fair few PLTR examples in that as well, such as earnings gap up, ORB. So context here, little gap, okay, reclaiming the 50, which is going to be here. So you see the 50-day, that purple line, that is this moving average that you see plotted here, this price level. So it reclaims it, bullish first 5-minute candlestick, more bullish than the triple Q's first 5-minute candlestick. So it's already showing me some intraday relative strength straight out the gate. Right in the opening part of the session, boom, PLTR is strong. Okay, I like that. Leading stock on the daily chart, and then intraday it's showing me strength as well. So I'm taking the trade through the high of this bar here, Okay, I get filled at 945650, I believe the price was. I'll put up the Interactive Broker statement somewhere. I may have done it earlier on in this video. Okay, and then my initial stop loss low of the day by a cent, which as we said is 1.61%, assuming no slippage when I get stopped out. PLTR pretty liquid stock, so not expecting too much slippage when I then get stopped out. And then you can see it pushes higher. Okay. So push like this. Okay, it's getting out quite well. It's then overcoming this kind of little area in here, this prior high, and that would then be this double bottom type pattern here. Okay, so I'm expecting some traders to be coming through up at this level. I don't want it necessarily up here. I want it here on the 5-minute ORB. Okay, I don't want to be buying this extended. But what happens at 10:15? It's actually 10:10. Is the triple Qs on the 15th of April runs up into its 21-day EMA. You see this blue line here. Okay, you see this blue line? This is running into the 21-day EMA right there on the daily chart. That's that level that you see there. If you want that indicator, search my name on TradingView. It's daily moving averages on intraday charts. Okay, that will then plot the daily moving averages onto the intraday charts. Really nice reference point. Okay, so as it runs in, you get this supply shoot here, and the algos go a little bit crazy. Okay, the algos here at 10:15, they go a little bit crazy. Look at this. Look at the pop in the volume at 10:15 for the Qs, and it also undercuts the prior session low, which was set by the low of the first 5-minute candlestick. See, drives it right down here. Look at that. Look at the volume coming through on that 10:15 bar. So the triple Qs goes from running into the 21-day EMA reverses like this. What does PLTR do? Does it get anywhere near at 10:15 the low of the day? It doesn't get anywhere near it. Look at it. The low of the day is down here where my stop is, which is 93.04, 93.05. PLTR is nowhere near it. You see that? It's holding up here. It's holding above my entry when the triple Qs just did this. Now this is intraday relative strength. The triple Qs rolls out of bed really, really hard. PLTR goes, no, you can pull me down a little bit, algos, but I'm so strong today. So these are things that I then look for to go, okay, I'm potentially on a leader here. I'm potentially on a leader. I want to try and ride this one. Okay, I want to try and ride this one as far as it will go because it continues to show me strength. If a stock continues to show me strength, then I want to try and stay in the position. As Dava said, I have no reason to sell a rising stock. I want to try and stay with it, but it's the context here of understanding what the indexes do at 10:15 and what PLTR does at 10:15. Now, if we fast forward, PLTR, steady intraday uptrend. Generally speaking, a series of higher highs, higher lows. So higher high, higher low, higher high, higher low, higher high, higher low, higher high, generally kind of higher lows, and then it starts consolidating in here. Now, what's quite interesting around 2:15 p.m. Eastern time, look at this. PLTR is here. Now, you may say, well, okay, it's there. Remember the high of the day is here. The current high of the day is here, set around quarter to one, okay? What do you notice with where the triple Qs is at 2:15? The triple Qs is on its session lows. Think about this. The triple Qs is on its session lows. The triple Qs has, generally speaking, made a series of lower low, lower high, okay, higher low, but lower low, lower high, sorry, coming through in there, lower low, lower high, lower low. See how the intraday trend is the opposite. PLTR, higher highs, higher lows generally, whereas the triple Qs is making a series of lower highs and lower lows. It's doing the opposite. So think about it. PLTR is all the way up here. The low of the day is down here where my stop is. The triple Qs is on its low of the day. It's making new session lows. But PLTR is all the way up here. PLTR is ridiculously strong. This is the thing to try and train your eyes to. It's so important to identify relative strength across multiple durations. I cannot stress it enough. If I'm going long, this is what I want to see. I want to see strength, a lot of strength, but relative strength. Okay, a stock can be strong, but it can actually be relatively weaker than the indexes because the indexes could be absolutely powering high and the stock is kind of meandering higher. So it's about looking for these nuances and it's about realizing when a stock is acting in a very special manner. Not every trade is created equal. Not every 5-minute ORB on PLTR is going to play out like this, where it's showing this degree of relative strength, and it's then the relative strength that you're seeing on the daily chart as well. This is why every trade is unique, and you kind of bring that kind of adaptability and that open-mindedness to how the trade is going to unfold. Mark Douglas, in his book, Trading in the Zone, talks about making yourself available to what the market wants to offer, which could also be making yourself available to what the stock wants to offer. So if I see a stock that is, and I'm long, and it's showing a tremendous amount of relative strength across multiple durations, I'm going to be more likely to try and hold it because the stock's indicating to me it wants to go up. To use a Livermore terminology, the line of least resistance for the stock is up. Conversely, if I'm short a stock, I want to see a lot of relative weakness. I want to see a stock that is weaker than the indexes and is showing me weakness. And that line of least resistance is to the downside. So these are some of the real kind of nuances and the subtleties to pick up on. Are you seeing relative strength on the daily chart? Are you seeing relative strength on the intraday chart, and to what degree? And this is how you pinpoint, I think, and better ensure that you are trading the leading stocks in the market when they are displaying this tremendous amount of relative strength, like PLTR was on April 15. So this video now is going to flow into a guided tutorial video, which is going to be very detailed in nature to exactly explain the other type of things that I'm looking for when PLTR gaps up. And it's a gap up opening range breakout, such as we're entering earnings season, so we could see a lot of earnings gap up ORB type setup, opening range breakout. So I really hope that you've enjoyed this part of the video and that you enjoy the next part of the video as well. So thanks for watching and enjoy the next part. Hey guys, hope you and the families are doing well. Welcome to the tutorial video which accompanies the PDF Gap Up Opening Range Breakout Long Setup Trading Manual, also known as the Gap Up ORB, or you may hear me refer to them as Gap Up ORB. So ORB simply means Opening Range Breakout. Before we get into it, please take a moment to read the disclaimer either via this video or in the accompanying PDF. We're going to start here on the slide. I'm just going to give you an overview of Gap Up ORBs. Now, if you're new to the concept of trading Gap Up ORBs, this slide may not make too much sense to you right now. But as we progress throughout this video, hopefully it'll make a little bit more sense and you can reference back to it. So I would advise that you have already taken and or watched or read the Blueprint trading course. That is just so you're going to be familiar with the trading concepts and terminology that I'm going to use throughout this video. So I'm going to assume in this video that you are familiar with how I trade. You've watched or read the Blueprint trading course. You are familiar with everything for brevity's sake. So I like to use gap up opening range breakouts in three main situations, being the stock is gapping up because of a positive reaction to its earnings. The stock is gapping up because of a positive reaction to a significant news catalyst. So the main examples that we're going to go through in the PDF and in this accompanying video are going to be gap ups in reaction to the stock's earnings and or a significant news catalyst. So you're going to see PLTR when it got added to the, or news that it was going to be added to the S&P 500. You're going to see Summit Therapeutics, SMMT, where there was a significant news catalyst that came out. That's a biotech related stock. So we'll talk about that. Or the stock is gapping up as part of a group-wide move because of a significant earnings and or news catalyst and or reacting favorably to a positive development. So i.e. if it's crypto related stocks and Bitcoin has powered up over the weekend, or Bitcoin is up 5%, 10%, that probably means a lot of crypto stocks on Monday morning are going to be gapping up in reaction to what Bitcoin did over the weekend. It could be a sympathy play to an earnings event. So let's say that Nvidia reports blowout earnings and then other semiconductor stocks are gapping up in a kind of sympathy play to the real kind of potential leader of the group, of the theme, gapping up big on its earnings. So you've got to be aware of opening range breakouts about correlation. So it could be there's a significant earnings, there could be a news catalyst, or it could be reacting favorably to a positive development. And that's where you've got to be pretty open-minded to what is the positive development. If it's not clear in terms of it's this stock's earnings or is this specific news catalyst, you may have to do a little bit of digging for, okay, why is this stock gapping up? What is really driving the move here? And then assessing whether or not that kind of move is going to be a material development for the company. We'll get into that as we start looking at several examples. My preferred entry timeframes for the gap up ORB are the 5-minute, the 15-minute, and the 30-minute. Very occasionally, I will use the 1-minute time frame, but generally, I'm looking to enter the positions on either the 5, the 15, or the 30-minute time frame. Often, the time frame I decide to use depends on how the action is unfolding in the moment and whether the prior character of the stock indicates certain time frames are better than others. When studying the character of the stock, you may observe 15-minute ORBs are better than 5-minute ORBs in terms of winning percentage and acceptable initial risk relative to potential reward on a specific stock. There's not a one-size-fits-all when trading ORBs. Stocks behave differently, so being adaptable and having the ability to assimilate information and make high-quality trading decisions promptly is of utmost importance when trading ORB. So what I mean by that is if you are, say, trading a stock on a very specific catalyst, and let's say that it's an earnings gap up and you're looking at company ABC and it's gapping up on its earnings, what I do there in those instances is I go back and I study the prior earnings gap ups and I will assess the action on the 5-minute chart, the 15-minute chart, and the 30-minute chart primarily, and I'll go and take a look and go, okay, the 5-minute, it just doesn't like the 5-minute. It kind of gaps up and then it just gets sold into, then it can consolidates, and then it goes. So in that instance, potentially the 15-minute or the 30-minute time frame is going to be more effective. However, I may kind of assess the character and go, wow, this stock loves a 5-minute ORB. It just gaps, it moves up. The initial risk relative to potential reward, we'll talk about that when we bring in 20-day ADR percentage, is nice. This stock likes a 5-minute ORB. Therefore, I'm going to be more minded to go with a 5-minute ORB if I like the action that I'm seeing unfold relative to a 15-minute or a 30-minute. But as I say there, much depends in the moment, okay? A lot of trading, most trading, all of trading pretty much is about moments. It's in the moment and how you assimilate the information that you are seeing, and then how you kind of make decisions with that information. I think that's really important. So we'll talk about that as we go. The benefit of gap up ORBs in a trader's toolbox is the ability to enter where there has been a positive development for the company, but conventional breakout setups would not enter a position because of being extended from the correct entry point. Thus, ORBs can help the trader enter when there has been a material change for the company. So let's say it's a FDA approval for a phase 3 trial, and the company is going to be able to start monetizing this brand new revolutionary drug that's going to be a world-class drug, market leader, huge end markets, and it's going to be able to monetize this and start selling it within 3 months or 6 months. And the company comes out, they say FDA approval, phase 3 trial, we're going to monetize this within the next 3 or 6 months. We're expecting our sales to be X, and this is going to materially change the outlook of a company, potentially from a profitless biotech company to now the company is just making oodles and doodles of cash. Now there is going to be a material change. So it's potentially getting you in on the proverbial ground floor of that material change for the company. But again, this is where you got to think about it, okay? ORBs are a thinking trader's setup. You got to be a thinking trader, okay? It's not just going to be a blanket, I just buy the 15-minute, I just buy the 5, okay? You got to think about this, okay? This is a thinking trader's setup. So this trading manual will cover the 4 aspects of each trade. Okay, 4 aspects to each trade, which is identify, control, mitigate, and optimize, apply to gap up ORB. So as you know, if you've taken the Blueprint trading course, I break each trading setup down into 4 distinct parts. How do you identify, how do you control the risk, how do you mitigate the risk, and how do you optimize the profits? So hopefully that there is a good kind of intro to this. So I'm not going to spend too long on this. Hopefully it should all be pretty self-explanatory, and I'll explain it as we go a little bit. What I will just highlight here in terms of the 5-minute intraday chart setup, you can see the custom MACD settings. So you're going to see 5-minute charts, 15-minute charts, and 30-minute charts. These are the custom MACD settings that I apply. So the MACD obviously being down here, I keep that consistent, whether it's the 5, the 15, or the 30-minute time frame for all intraday charts. These are the MACD settings I'm using. What you'll see as well is the orange moving average on the intraday charts is the 6 EMA for the relevant time period, and the blue line is the 21 EMA for the relative time period. What you'll see as well is you'll see horizontal lines in some instances going across the intraday charts. That is plotting the price levels, okay, from the daily chart onto the intraday chart as a reference point. You can obviously see when the icon comes up, when it says E, that is going to be the earnings catalyst, post-market, pre-market data, but I will explain as we go. Positive MACD signal, bearish MACD signal. Okay, let's get into it then. So let's start off here with PLTR. Now, in the vast majority of cases, I think all, maybe apart from maybe one example, but I think all of them that I put in here are ones that I entered. Okay, so these are ones that I was taking the position. So with PLTR, okay, this is an earnings gap up. So with an earnings gap up, you can see it on the daily chart here. So we're going to have the daily chart on the left hand side. So this is going to be our daily chart here, and over here we've got our 5-minute chart, which is indicating the intraday time frame, and then I'll teach you where to enter the positions, how to identify it, how to control it, how to think about mitigating the risk, and then how to think about optimizing profits. Okay, so we're really coming at this from 4 main aspects. How do you identify an RB? How do you control the risk? How do you mitigate the risk? How do you then optimize profits? And we're going to utilize the multiple time frames, being the daily on the left hand side and the intraday chart 5, 15, and or 30-minute time frame on the right hand side. Okay, so with PLTR on the daily chart, there's a couple of things that I'm looking for, whether it's a significant news catalyst, whether it's an earnings catalyst in this event here. Okay, what I want to see is on the daily chart the stock to be above all key daily moving averages. So on my charts, the black line is the 10-day EMA, blue line 21-day EMA, purple line 50-day simple period moving average, the grey line is the 65-day EMA, and the red line, which would be somewhere off the chart down here, is the 200-day simple period moving average. So when I am entering the position, I want price on the daily charts. As I said, thinking traders set up this. I want price on the daily chart to be above all key daily moving averages. Okay, why? Because my mental representations of trading thousands of these and studying tens of thousands of these, okay, the best ones occur when price is above all key daily moving averages, and then it really helps me from a trade management aspect, as I'm going to teach you later, how we then think about managing the trade to optimize profits in terms of selling rules and selling guidelines that I look to follow, to both in terms of thinking think about the size of the monetary gain, but efficiency of the monetary gain as well, also known as the time value element. So with this here, PLTR builds this kind of little range in here, and then it's gapping above this range. Even better if the stock is gapping up into 52-week high territory, but even better if it's gapping up into all-time high territory. Okay, big gaps into all-time high territory on a significant catalyst, that's really going to get my attention, certainly if it's a true market leader and or a momentum leader. But as PLTR is gapping up here, okay, so the entry is around 48.35 on the 5-minute ORB. You're going to get a little bit of slippage on these as well, likely, again, because you're kind of looking at this, maybe you're looking at something else. I'll teach you about the order entry method technique that I use in a couple of slides time as well. But as it's gapping up here, okay, 48.35, which is here on the 5-minute chart, okay, note how it's cleared this range. Okay, it's cleared this range and it's above all key daily moving averages. Okay, so that is it there on the daily chart. Now on the 5-minute chart over here, they report earnings. So here is where the earnings come out in the post market. So the reaction, so you see this session here, okay, so the market closes, PLTR reports their earnings, and then the reaction is the next day. But you can see the reaction in the post market. Look at this bar. You see this bar? The initial reaction is very, very positive. For whatever reason, the market really liked it. Now, again, you've got to go into it a little bit and go, okay, potentially there's a beat on the earnings. There's a beat on the sales. Maybe the company didn't beat on, say, the earnings, but they beat on the revenue, and actually they're going to raise full-year guidance and say, hey, we just got this massive backlog. Potentially we're going to sign a new contract with a government agency or this much bigger company, yada, yada, yada. So sometimes it's not just on the face of it that, oh, they beat on the earnings and they beat on the revenue. It may be you have to go a little bit deeper. But what I would say is the thing that I am most focused on is not what the company said, it's how the market is reacting to what the company said on the earnings. Really key, really key there, okay? So the initial reaction on this 5-minute bar, boom, like that, with the sound effect, boom, right? See how it just moves up here, really aggressive, okay? The market likes it, popping the volume as well. The initial reaction is very positive. This is as positive as it gets in terms of initial reaction. Consolidates in the rest of the post-market, starts consolidating in the pre-market. Here you can see the 10-day EMA price level, the 21-day EMA price level. The others will be below that. So when price opens, it is above all key daily moving averages. And then the first 5-minute candlestick, this is where you're tape reading it a little bit, okay? This is where the blueprint trading course comes in, where I was teaching you about different types of Japanese candlesticks. Okay, first 5-minute candlestick, nice big shakeout demand tail, strong close. Note the high relative volume coming through, positive MACD signal. Okay, I'm looking for a I don't want to be fighting the MACD on the entry. Okay, I don't want to be fighting it. I like having the MACD go with me as well. Again, mental representations. Go and study what the creme de la creme do and note the common characteristics. Jot them down, note them. What do you see? What did you see PLTR do? What did you see Tesla do? What did you see AppLovin do? What did you see Nvidia do? What did you see Broadcom do? What did you see this stock do? Note all the characteristics, the common characteristics that you see, and then look for those characteristics. That's how you build out your mental representations with any setup. So with this here, when I'm taking the entry, okay, with the 5-minute ORB, note how price is above the 5-minute 21 EMA and also the 5-minute 6 EMA. So in the vast majority of cases, I'm looking for price when I'm taking the entry to be above all key daily moving averages and the intraday moving averages as well, and the MACD to be positive. Okay, check. Okay, it's like a checklist, okay? Certain things that I am looking for. So the entry is in here. So with a 5-minute ORB, okay, I'm taking it through the high of the first 5-minute candlestick, and my stop loss goes underneath the low of the day in the vast majority of cases by a single cent. Now, if it's right on a round number, maybe I'll go a couple cents below. Maybe there's a key daily moving average. I'll go just below it. So a little bit, again, it's a thinking trader setup. There's no one-size-fits-all approach here. This one I'm really going to try and stress in this video, okay? You have to think. Like, you really have to be able to think with this. So I'm taking the 5-minute ORB here. Okay, you're going to get a little bit of slippage, but the high of that 5-minute bar is 48.35. That's the pivot. That's the buy point with a 5-minute ORB on an earnings gap up. So in terms of then entering the order, potentially, if I've got more time and I'm just dialed in on that, I will look to use a buy stop order with the stop loss attached, and then I know where I'm setting the buy stop. So boom, it goes through, then I can get filled. If it's a bit of a liquid stock, potentially it could be a buy stop order where you're also doing a limit range on it as well. So then you're limiting the maximum amount that you're willing to pay for any shares. Again, I'm attaching the stop loss on it. I'm always going to trade with a stop loss. So with the entry being here at 48.35 and the stop loss low of the day by 46.85, okay, that is going to be these levels here. You see this 48.35, 46.85 in here. Now that equates, if you get perfect execution, which again is going to be rare, 3.10%. Okay, 3.10% is the initial risk percentage. So we're thinking about the identification, we're thinking about the controlling. So when we think about the controlling risk, Okay, we've got 3.10%. Now, relative to the 20-day ADR percentage, we're just going to go off of this here. It would have been a little bit different at this moment in time, but because I haven't kind of rewound the chart. But let's just say with the example here, the 20-day ADR percentage of PLTR on the earnings gap up here is 5.4%. What does that mean? That means the 20-day average daily range percentage of the stock, excluding gaps, is 5.4%. So the range of the stock over the last 20 days, excluding gaps, is 5.4%. When I'm taking the ORBs, I'm ideally looking for half to 2/3, but sometimes because of how explosive they can be, it can be closer to the 20-day ADR percentage. But I'm using this as an initial risk metric to gauge my risk against. Okay, so half to 2/3 is ideal. Okay, if you can get it even tighter, even better, basically. But sometimes it can be around the 20-day ADR percentage. That can also factor into what time frame you elect to use. Sometimes it just doesn't look right on the 5-minute chart. You don't get that really bullish candlestick, and it kind of ebbs and flows, and then it kind of sets on the 15-minute chart. But you're like, okay, it looks really good on the 15-minute chart, but my initial risk could now be, for instance, 7% versus a 5.4% stop. Do I want a 7% initial stop off a 20-day ADR percentage of 5.4%? Probably not. It's going to be the answer to that, unless I think it's uber duper good. Maybe I then have to size it down as well in terms of then controlling the account equity risk. Okay, as I said, thinking trader setup, this one. Okay, thinking trader setup. What I'll then use, so we're just flowing through here in terms of identify, control, mitigate. Now let's go. Well, in terms of the risk mitigation, you can then decide. Okay, do I want to take a half off at 1 times risk? Do I want to take a third off at 2 times initial risk? Potentially you want to take some off if it on the first close below the 10-day EMA. Maybe you want to just see it power out when it gets to 1R, 2R. You then move your stop loss to break even. For me, it suits my personality better to either sell half of the position at 1 times or a third at 2 times. If it's really strong action, I'll look to take off a third at 2 times, and then I'm trying to sit, and the moving averages that I'm trying to trail, okay, as trailing stops is going to be the 10-day EMA, which is the black line here. See this black line? 10-day EMA, and or the blue line, which is the 21-day EMA. Much of that is going to go back to the stock's character. Which moving average do I think is going to be best, and or combination to be optimizing profits? Okay, so 10-day EMA, 21-day EMA are going to be my first starting points. Very rarely am I keeping it back for the 50. Maybe I'll keep some back. But also if the stock gets extended from the 10-day EMA, I may look to go low the day, low the day, low the day, low the day as a trailing stop and choke the position off that way. Potentially there's overhead resistance, as you're going to see with Tesla a little bit later on. So now what I'm going to show you, this is the exact same chart on the daily. Okay, we've actually just gone to the 15-minute. So there is the 5, 15-minute. There's the 5, 15-minute. So I'm just showing you the same setup, but it's now on a different time frame. So over here on the right hand side, we've now got the 15-minute. What do you see with the 15-minute? Again, a lot of things here. Positive MACD. The price at the entry point, where the entry point was, I was taking PLTR on a 5-minute ORB instead of 15-minute ORB. So my entry was coming through the height of this bar in here, okay, but on a 15-minute ORB, then now the entry point would be 49.46. Initial stop loss still low the day, which is 46.85 by a cent, but now your risk is 5.28%. relative to a 20-day ADR percentage of 5.4%. Okay, it's still below the 20-day ADR percentage. Nice 15-minute first candlestick coming through in here. Price is above the intraday moving averages, but you can just see here how if we now go to the 30-minute time frame, okay, so now exactly the same setup. So it's this earnings day here. We're looking at the 5, we're looking at the 15, we're looking at the 30-minute. This time the entry would be at 49.89 through the high of this first 30-minute candlestick, which is a bullish candlestick. Okay, it's above the intraday moving averages. The MACD is positive as well in this time frame. Large relative volume coming through. Initial stop loss again 46.85. That hasn't changed, but now your initial risk is 6.09%. It's nearly twice that of the 5-minute ORB. So if I go back 2 slides, okay, the 5-minute ORB was 3.1%. See that? Whereas the 30-minute ORB is 6.09%. So you could in effect try the 5-minute ORB twice for the same risk that one would have ended up taking on the 30-minute time frame. Now, do you know that ahead of time? You don't know that ahead of time, but that's why you want to assess as the trader's developing. Okay, you want to assess it. Okay, what am I seeing here? Am I seeing positive price action? Am I seeing large relative volume coming through? Does it look like institutions are piling into this thing? Do the institutions want it, or am I seeing big gap and fade action and they're just selling into it? Okay, oftentimes in the first kind of couple of minutes or so, you can see some kind of profit taking, or potentially there's overhead supply. Trap buyers are then selling into it, because if you think people down here that are then going, oh, I'm up 15%, 25% on the earnings, so I'm going to take it all off, I'm going to take some off. Okay, people selling into it a little bit, but then what I'm looking for, and the question I'm asking, do institutions want this? Are they absolutely piling into this thing? That is one of the key questions that I ask myself. Then in terms of the management side, so risk mitigation, optimization of profits, certainly the final part there, optimization of profits, it's the same thing, whether I took it on the 5 minute, the 15 minute or the 30 minute in the vast majority of cases. Okay, ideally I want to get positioned, free roll it, sit, ride the trend along the 10-day, potentially keep some back for the 21-day. If we go on to the next slide, okay, this one here is an earnings gap up as well. So this time there's a little bit of overhead resistance. Okay, you see this over here to the left, a little bit of overhead resistance. You may want to be mindful of that. I'll talk about that more on the Tesla chart. I didn't have the 5 minute chart available because I couldn't go that far back in TradingView, but very similar here. Okay, so in terms of the 15 minute, okay, the entry is going to be through the high of this bar, which is $20.99. Stop loss low of the day by a single cent. So that's going to be $19.75. So you can see what that looks like there on the daily chart. Now, the initial risk in that instance is 5.91%. Now, relative to a 20-day ADR percentage, we're just going to say it's 5.4%. Again, then you've got to be gauging that again. Okay, I'm just over the 20. That's kind of pushing it there. Okay, so then you got to start going, okay, do I really like the action? Is PLTR a mega leader here? What were they saying in the earnings? Have they just raised? Have they just beat in terms of the earnings, in terms of sales? Have they raised full year guidance for this year and next year? Have they just, as it been in PLTR's case, have they just won a new government contract? Have they just signed a mega cap company as a new customer? This and this and this. Have they just released a new product as well? So you've got to go into it a little bit. As I said, thinking traders set up this one. You can see here with the 15 minute, note how the MACD is positive. You can see the 50-day price level. So if you look here on the daily chart where I'm just circling here, see how you have the 10, 21 and the 50. So these levels there are right there. Okay, 50-day, 21-day, 10-day. I like plotting those. Initial reaction, very positive, above all the key moving averages at the point of entry. Okay, now this one here, you can see it moves up very quickly. So again, you can think about free rolling that into that, take a half off, take a third off. That's how I tend to do it at 1 times or 2 times initial risk. I'm trying to keep my stop loss low of the day. Okay, I don't want to be messing around, pushing my stop loss up here. I want my stop loss low of that gap. That gap should now hold as support. Price should not breach that level. And then I'm trying to ride 10-day and or 21 days. But again, taking it 1 day at a time, assessing what do I think is going to be best here. You can see this prior earnings gap up over here, right? So if you just go, right, I'm just going to buy the earnings gap up here. I'm going to use the 5 minute ORB and I'm just going to sit for the first close below the 50. Well, first close below the 50 is over here. First close below the 21 is here. First close below the 10 is kind of this region in here, okay? So this is where you go back and you assess the prior character, both in terms of the entry, for what time frames you want to use, 5 minute, 15 minute, 30 minute, but also thinking about the optimization of profits. What selling rules and selling guidelines are you going to use based on the prior character of the stock that indicates what is best for the stock? Again, thinking trader set up this one. Okay, study the action of the stock. Study it. What is the stock telling you is best for this very specific type of setup in terms of identify, in terms of control, in terms of mitigate, in terms of optimization of profits? Here it is, just on the 30-minute time frame as well. Okay, but this time here, again, it's not a trade that I would take on the 30-minute time frame because the entry is through the high of the first 30-minute bar at 21.44. Initial stop loss low of the day, again, 19.75. That equates to 7.88% initial risk, and you're going into overhead supply as well. Off a 20-day ADR percentage, let's call it 5.4%. Risk versus reward is just getting out of whack there. Plus, you could be running into some overhead there. Again, that's one that I'm going to pass on. So again, you got to see how the action unfolds. Okay, is it 5? Is it 15? Is it 30 minute? What time frame do I want to be using here? How is it playing out? What is it looking like? Again, tape read it, get a feel for it. Does it look like institutions are piling in? So this one here is going to be a news catalyst. Now, the way that I trade it, okay, is exactly the same to an earnings gap up. Okay, but I want to understand what is the news. Now, the news here is that PLTR on the 9th of September, it gets reported that they are going to be included in the S&P 500. So that's the news. Now, when a company gets included or news of being included into, say, the NASDAQ 100 or the S&P 500, there's then going to be a lot of flows into that stock in the majority of cases, but you visually then want to see it. Why? Because there's going to be a lot of ETFs that then have to buy the stock as kind of tracker funds, right? If you're just buying, say, the SPY ETF or the Triple Q's ETF, okay, they're going to be buying. So then you've got to be assessing, okay, what do I think is going to go on here? Am I going to see a lot of demand coming in as potentially institutions try and get positioned? Because they're then going to have PLTR as kind of then a benchmark portfolio potentially as well to include it, because a lot of these institutions, they just want to track whatever the Triple Qs do, or in the vast majority of cases the S&P 500, they just want to match the performance, because then they're less likely to get sacked. So they want to be within a very narrow range of whatever their benchmark is, and then when they are down, say year to date or week to date or quarter to date or month to date, then go, yeah, well, the S&P 500's down as well. When they're then up, they can go, yeah, look, we're tracking closely the benchmark, we're not very far back. Okay, that's basically the game of asset management there. But anyway, right, so then what I'm doing is, okay, there's a significant news catalyst that comes comes out. PLTR is then gapping up on the back of that, being included, or news of being included, to the S&P 500. And as you look at it right here, this 5-minute candlestick, do you see it? Initial reaction, very positive. So this is when the news breaks that PLTR is going to be included in the S&P 500. Boom, again, like that, okay? Supply and demand is supply and demand. If I take you back to the 5-minute chart, okay, of the earnings reaction, okay, see, this is exactly the same. This is why supply and demand looks like supply and demand. It is buying and selling. It's accumulation and distribution in different quantities, subject to who is playing around with it. This is institutions going, we love it. Boom, we're in. Okay, this here as well. Institutions going, we may not love the company, but we got to get in here. Okay, this is what I'm looking at here. Okay, initial reaction, really, really positive in the post market when it gets reported. Pre-market starts wiggling and jiggling, but generally trending up. And then here, the 5-minute ORB, see how it's here? So it's through the high of the first 5-minute candlestick, bullish first 5-minute candlestick. Also clears the pre-market high range. That's just a little cherry on top, okay? Clearing the pre-market high range, even less overhead. Sometimes you can see a stock rally and it hits, say, the pre-market resistance or the post-market resistance, just a little something like that. Even better if it's breaking out over that range. So the entry is through the high, this first 5-minute bar, 33.51. Initial stop loss low of the day by a cent, 32.46, like that. Look at the large relative volume coming through. Again, on the daily chart, you can see what that then looks like. It's above all the key daily moving averages. It's also taken out this range here. Okay, like it, lots of volume coming through. PLTR, prior leader. This is a big gap down reverse bar, by the way, to the 200. I would have shaken a lot of people out. 52-week highs coming through on the relative strength line. I love that. Indicates the stock is a leader. In terms of the initial risk with a 5-minute ORB, you're at 4.22% if you assume perfect execution, relative to the 20-day ADR percentage of 5.4%. Okay, that there is a favorable metric. But what you're starting to see here is supply and demand looks like supply and demand, right? Again, same setup here. We're just using the 15-minute chart. So this is the news of being included to the S&P 500 instead of the 5. We're now looking at the 15-minute chart. Again, bullish first 15-minute candlestick, clears the pre-market high range as well. Note the large volume coming through. Note how the MACD is positive. You can see here, 15-minute chart, initial reaction, very, very positive. So the entry is here at 33.89. Initial stop loss, low day by a cent, 32.46. Now this time here, the initial risk, I messed it up. This one, it would have been a little bit tighter, is 4.22%. I'll change that before you guys see the PDF. I will update that. 30-minute time frame as well. Now the 30-minute, you're actually seeing a bit of a supply shoot here. I would shy away from this one. Okay, I don't like to see these really big supply shoots. I like to see nice strong closes. So I would actually shy away from this one. In terms of the 30-minute one, your risk is getting up as well, closer to that 5.4%. But I like to see stronger closes. You see the 5-minute bar here, nice strong close. 15-minute chart, strong close. You then actually see the kind of turnaround here on the 15-minute. Sometimes it turns around. You've got to be a little bit patient with them. Okay, that's it. I'd probably wait on that one. App Lovin'. So this one here is on its earnings 7th of November. So as it's gapping up here on the daily chart, note really nice uptrend here. 52-week highs all over the place coming through. Is above all key daily moving averages like that. So on the 5-minute time frame, it's through the high here. Okay, 241.16 initial stop loss, low day by a cent, 228.09. So then you can see the placement of the initial stop loss. MACD is positive at the time of entry. Price is above the key daily moving averages. Note the bullish first 5-minute candlestick. So on the daily chart, this is then what it looks like: 5.42%. Let's say the 20-day ADR percentage, 7.63%. Okay, around about 2/3 or so, just over. In terms of the 15-minute chart, okay, so it's the same setup here. App Lovin' on its 7th of November earnings gap. 15-minute charts here, nice bullish 15-minute candlestick. Note the initial reaction to the news, so when it comes out in the post market, really favorable reaction. We like seeing this. This is good. MACD positive as well. So really favorable initial reaction. MACD is positive. Price, in terms of the first 15-minute candlestick, bullish candlestick above all the key daily moving averages. However, in this instance, your initial stop loss is now starting to get away a little bit. Okay, 7.18%. Does the risk versus reward make sense? Okay, you've got to be asking yourself these questions as it is playing out. Does the stock have a history of earnings gap and then push? How does it move? Does it ride the 10-day? Does it ride the 21? Is it just a choppy stock? We want to avoid those. Okay, but again, think about free rolling, half off at 1 times, a third off at 2 times, and then what I try and do, sit and let the 10-day and 21-day EMA trends play out. Here it is on the 30-minute chart. The issue here is you have a nice 30-minute candlestick, all the points that we were talking about, but now your initial stop loss is at 9.39%. That risk versus reward is really starting to get out of whack when you approach high single figures. Okay, it becomes much harder to free roll the trade, and then the potential risk to reward as well. So for me, you've got to then be assessing it in real time. Maybe it doesn't look quite right on the 5-minute, so you wait for the 30-minute, but then you just go, do you know what, the risk just doesn't really make sense here. That can happen. Now Tesla, we're going to start getting into the weeds a little bit here. Okay, so Tesla, this is an earnings gap up ORB on the 24th of October 2024. So on the 5-minute chart, okay, so we're looking at this action here on the 5-minute chart. Okay, the entry is through the high of this first 5 minute candlestick. Note the commonalities that you're seeing with the 5 minute bars, the 15 minute bars, the 30 minute bars. Okay, bullish, they're looking strong, right? So the entry is right through the high here. Okay, at 247.55. The initial stop loss low of the day by a cent, 242.64. Okay, so this is your initial stop loss. MACD is a positive here as well. Okay, we like that. It's above the intraday moving averages. So again, what I would use here, I'd either be looking at it dialed in and using a market order with a stop loss attached, or I'd be looking to use a buy stop order. So boom, the first 5 minute candlestick closes, and then what I'm doing is setting the buy stop at 247.55, attaching the stop loss to that at 242.64, and then boom, the order goes in. It gets filled as soon as it starts taking out the high of this first 5 minute bar there. Okay, so I'm not waiting until the close of this 5 minute candlestick. The entry is there through that high. Okay, through that high. Now with Tesla, if we go and look at the daily chart, you can see the entry location. Okay, at 242.55 and 242.64 for the initial stop. But what do you have to the left? Look at this overhead resistance. Look at this overhead resistance. What does Tesla do? Well, it pushes up, stalls into that overhead resistance in the 260 to 270 range, right? Stalls into that. So from a trade management perspective, you've got to be aware of that. From one, a risk mitigation standpoint, okay, boom, I want to free roll into that overhead resistance. And then also potentially from an optimization of profits, there's a lot of overhead there. Okay, how do I want to be treating this one? Now for me, Tesla, when it starts to go, it just goes. It just rips, okay? So for me, Tesla, adjusting stop losses to low the daily low, 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 low the daily low. You would have been taken out up here. Okay, rather than wait for the first close below the 10-day, which is here, first close below the 21, which is a big gap down here, or the first close below the 50, which is over here. Do you want to get back all of that? Okay, so this is why you assess the prior character of the stock. Okay, what is going to be the best way to optimize profits when this stock starts going, or from this specific setup and earnings gap up, plus we have that overhead resistance. Go back. So the stock, is it low the daily low, low the daily low, low the daily low? Is it all or part of the stop loss to do that? Is it keep some back for the 10? Again, thinking traders set up this one. Let's go on to the 15-minute chart here, okay? So Tesla, 15-minute chart. Now what we have here is a really nice bullish first 15-minute candlestick. The initial reaction to Tesla's earnings, positive, okay? It actually in the post-market powers through, okay? So remember in here, so what we have, Tesla reports earnings after this day, and it starts powering through the 1021 and the 50. See this? And there they are, 1021 and the 50 on the intraday chart. Powers through those. Really positive reaction, consolidates, nice uptrend above the key daily moving averages. MACD is positive. High relative volume coming through on there. You could put a 30 bar average on there. You can just eyeball it as well for the purpose of these videos, so there's not too many kind of black lines going all over the charts. Okay, I've taken off the 30 bar average, but I would have the 30 bar average on there. Okay, I know some people use like vol bars and things like that. For me, I just eyeball it. Okay, a little bit of common sense on it. It's absolutely fine. A 30-minute time frame. Okay, kind of the same here, right? But now the risk is going up to 3.37%, whereas on the 5-minute chart we had 1.98%. So if I like the action on the 5-minute, I think this stock likes the 5-minute for say a gap up ORB, then I look to use the 5-minute. Sometimes it doesn't look quite right on the 5-minute. Okay, can I get it on the 15-minute? Can I get it on the 30-minute? Let's now go into the next example, which is a significant catalyst in terms of a biotech related stock, and it was FDA announcement regarding a phase 3 trial and some positive data coming out, so a material change for the company. So I'm not going to go into kind of the absolute specifics, mainly because I can't actually remember the name of the drug, Evanescum or something like that. I think it was for Summit Therapeutics. But the point that I want to make here is, if it's a biotech stock, well, it could be earnings, but a lot of biotech companies don't have earnings. So what could happen here is it's FDA phase 3 approval for this drug, and it's going to be a world-class drug. The best in class is often referred to. It's going to materially change the profitability or potential profitability of the company. So it's a material change for the company. Okay, what happens in the majority of cases with biotech related stocks, certainly if it's phase 1 or phase 2, you can have initial hype comes out that, okay, it's FDA phase 2 approval for this drug, but then they're going to have to go through phase 3 approval. So there can be some kind of hype and some buzz while momentum traders and some people are kind of coming into it. That may last a couple of days, couple of weeks or so, and then it just kind of fizzles out, because then the market kind of realize, and other market participants realize that, okay, the momentum's kind of going out of this, and hang on a minute, it was only FDA approval for phase 2. The company is now going to have to spend many millions getting this drug through phase 3. How long is that going to take? That's going to take another 5 years or something at least. I'm just kind of finger in the air for these figures. That's going to take another 3 to 5 years. The company is not making any money. They got very little revenue. They're profit. That means they're going to have to do a fundraise. They're going to have to go to the market. There's going to be a discount on that. I'm just going to sell. Right, do you know what I mean? You can see the psychology then play out on the chart. So initially what happens here, positive data comes out. stock power is higher, right? So you want to be assessing that with a biotech stock. Is this just going to kind of fizzle out? If you think it is going to fizzle out, I'm going to be more minded from that fourth part of the trade, optimization of profits, lower the day, lower the day, lower the day, as opposed to sitting for the 10-day and the 21-day and the 50-day. Okay, you also want to assess the prior character of the stock. So here, okay, the entry on the 5-minute chart is through here, 17.45, stop loss low day by a cent, 15.94. Okay, so then lower the day, just push that stop up, low the day, 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 then taken out up here on the little gap down the next day, rather than give back a load of profits to the 10-day and then the 21 and then the 50 is down here somewhere. Okay, so again, you want to think about the optimization of profits here. In terms of the initial risk, for me, this was right at like I actually really like the news that came out. So again, you may have a little bit of a feel for things as well. Okay, sometimes you're like, wow, I really like this news. Other times you're just like, oh, whatever, I'm not even going to trade this one. For me, I thought this was very material for the company, but aware that okay, it's probably just going to fizzle out here in a little bit. So again, you want to be thinking about the optimization of profits. So the 5-minute RB, I'm taking it here through the high at 17.45. You're going to get a little bit of slippage on them. Okay, so my entry is not at 17.45. I get a little bit of slippage on it. Initial stop loss down here. Note how the MACD is positive, the large relative volume coming through, price above all the intraday moving averages. However, there it's just over 8.5% initial risk. Like for me, relative to let's say a 20-day ADR percentage at the time of like 6.31%, I'm absolutely pushing this. I've really got to feel the setup here. Like I've got to go, wow, I think this is material, because again, not every news catalyst, not every earnings event is going to be the same. Some are going to be more material than others for the company. Okay, so it's kind of like a scale, right? It's not just going to be okay, every single one is here. No, some are going to be really key for the company and material. Some are going to be less key. Sometimes the companies can come out and say, it's okay earnings, it's okay, and maybe the stock's gapping up 5% or so, something like that. Other times companies say, wow, we have just blown this quarter out of the water. The next couple of quarters are going to be absolutely mega. By the way, we're releasing this game-changing product. Potentially it is Apple coming out with the iPod or the iPad or the iPhone. Again, they're like, wow, our sales are going to be here and we've got this new car and this and this and this, okay? Things are going to be different, okay? It's different. This is why I said it's a thinking trader setup. This is not just a blanket approach. You've got to think about it. You've got to be in the moment. If you can't be at your screen either, okay, if you've got work commitments, family commitments, travel commitments, whatever it's going to be, this setup ain't going to work, is it? Because you've got to be at the screen. You've got to be looking at it. You've got to be dialed into it, okay? And you've got to think about, okay, what am I seeing here in terms of the earnings, in terms of the news? Is it material? How material is it? How is the market reacting to it in the moment? Okay, so yes, a stock may be gapping up on, say, its earnings, or it's gapping up in this instance here, like Summit, because, okay, positive data has come out and it's this and this and this. So you may go, is this going to be a good 5-minute ORB? You have no idea until you see the action play out. This first 5-minute candlestick could not really be any more bullish. Okay, opens pretty much on the low, widespread, goes right out on the high of the first 5 minutes. It could be any more bullish. This is one of the reasons why I went, wow, this is really bullish. The market is reacting to this very favorably. Now, there'll be in rare occasions where I'm then looking at this, because I have four, when in terms of my main charting layout, I have the daily, the 30-minute, the 1 minute, and the 5 minute. Okay, so as I'm looking at the 5 minute and I'm assessing, okay, where is price on the daily? Okay, it's gapping up above this range, above all key daily moving averages. I got my eye on the 1 minute chart as well. So it may be like, wow, this is super duper strong out of the gate here. I'm going to target this off the 1 minute. In the majority of cases, the vast majority, I won't do that. Okay, 5 minute, 15 minute, 30 minutes is what I'll use. But if I think, wow, this is really strong and the first 1 minute candlestick looks like this, I may decide to go for it. Again, depend on the stock, but depend on how material I think the catalyst was, whether it's earnings or whether it's news. Okay, but this here is really bullish, really strong close, out on the high of the bar. Really like that. Here it is on the 15-minute chart, but the issue here is on the 15-minute chart, you're actually getting a supply shoot coming through. You'd then be trying to free roll into the pre-market highs. Okay, so here on the 5-minute chart, you're free rolling underneath the pre-market highs, which are up here at about 21.50. Okay, so then if you're looking to free roll, see here how it stalls out at about 21.50 region. That there is around the pre-market highs, just over pre-market highs. You want to be aware of that from a risk mitigation standpoint. Again, thinking trader setup, right? But here on the 15-minute chart, you're getting this big supply shoot come through. Your initial risk is now over 10%. That's like a no-no for me, okay? No-no. You start going double digits, it's just a no-no, okay? Just, yeah, it may be the best company from sliced bread, but the risk to potential reward doesn't make sense. There's always going to be another bust. You go onto the 30-minute chart, okay, really nice bar coming through, but again, your initial risk here, 11.55%. The risk versus reward is just out of whack here. Okay, it just doesn't make sense to be targeting this one at this level of risk. This is why I wanted to show you the 5 minute, the 15 minute, and the 30 minute. Okay, to explain that yes, it's the same. The same action is playing out on the daily chart, but how it looks on the intraday charts is different in terms of when you're thinking about how you identify it, how you control it, how you mitigate it, and how you optimize it as well. Okay, also be aware of those pre-market highs here as well at 11.55%. Also, when it's this big in terms of it, you just can't really size the position. Okay, it makes it a little bit more challenging. So that there, guys, I will wrap it up there, the video for the gap up ORB. So I forgot the name of it then, the gap up ORB. So hopefully that there was useful. Any questions, just ping me via the email or ask me via the platform. Thank you very much for watching that video. I hope it helps you in your trading. I will see you in a future video.